All right, let's get right to it. In a market absolutely flooded with noise, the big institutions are hunting for one thing: signal. And that difference, well, it's all measured in data points. Today, we're going to show you exactly how to find them.
Look, forget the forums, forget all the social media hype. Real trading, the kind that actually builds accounts over time, is all about discipline and objective analysis. We don't guess, we don't hope, we look at the data.
So this really breaks down the two worlds we're operating in. On one side, you've got the retail approach, which is so often driven by stories, emotions, you know the drill. And on the other, you have the institutional game. It's systematic, it's cold, it's all data-driven. They use these incredibly powerful scanners to find their edge. And that's the information gap we are here to close today.
But what if you could level that playing field? What if you could get your hands on the same kind of powerful, top-down data analysis the big firms use to pinpoint opportunities, but without paying thousands a month for a terminal? Well, that tool exists. It's called Finviz, and we're about to break down exactly how to weaponize it. Okay, this is where the real work begins. We're not just looking at stocks, we're building a machine designed to hunt for market anomalies, those setups where the data is screaming that something unusual is happening just under the surface. This is all about finding high-probability opportunities before they ever hit the mainstream radar. So to understand the mechanics here, we have to start with a key term: short float. Now, this isn't just some random number. It's a direct measure of tension in the market. When you see a high short float, it means a ton of people are betting against the stock. And that creates this coiled spring effect. All it takes is a little bit of buying pressure, and all those short sellers are forced to buy back their shares, which can create some absolutely explosive upward moves. So that brings us to the tactical question, right? How do we actually find these stocks? We're not just going to search around randomly. We're going to use the data to systematically identify stocks that have this exact coiled spring characteristic. We can build a custom screener to do just that.
And here's the process in action. First, we filter for a market cap over 500 million and an average volume over 500,000 shares. Why? We need to make sure the stock is big enough and liquid enough for us to actually get in and out smoothly. Then, the most important part: short float over 20%. That's where we find the tension. And finally, we confirm the momentum by making sure the price is trading above its 50-day moving average. We're looking for strength because strength is what's going to trigger that squeeze. Now, this brings us to relative volume, or RV. You should think of this as your real-time anomaly detector. If you see an RV greater than 1, it means trading activity is way higher than usual. That's a huge potential sign of institutional conviction. I mean, a price move on low volume is questionable, but a move on high RV, that demands your attention. And look, this screener is incredibly versatile. Let's just pivot to a totally different strategy: finding high-growth companies. We can filter for strong fundamentals like earnings and sales growth over 20%. That shows the company is expanding fast. Then, a high return on equity, which points to efficient management. The technical confirmation is simple: price above the 200-day moving average, confirming a solid long-term uptrend. This is how you find quality meeting momentum. Okay, so screening is just step one. Once we have a list of interesting candidates, we need to start analyzing them through that institutional lens. We want to see where the smart money is actually positioning itself. Are they buying? Are they selling? Hedging? What are they doing? And Finviz gives us several direct signals of what they're up to. We can see if insiders, the executives and directors who know the company inside and out, are buying or selling their own stock. We can track sector rotation to see where big capital is flowing. And of course, we can monitor analyst ratings and those unusual volume spikes for more clues. These are the footprints we need to follow.
Let's look at a real-world example here with Pinterest. The data shows significant insider selling. Now, does this guarantee the stock is going to drop? No, of course not. But it is a critical data point. It tells us that the people who know the company best are taking profits off the table. And that is information you simply cannot afford to ignore. Now, for a top-down, big-picture view, the heat map is honestly one of the most powerful tools out there. In a single glance, boom, you can see the performance of the entire S&P 500, all broken down by sector and industry. It instantly tells you where the strength and weakness is across the entire market. The Groups tab quantifies all this for us. So over the past month, for example, we can see clear strength in defensive sectors like healthcare and utilities, while technology has been really weak. This data literally reveals institutional rotation. A long trade has a much higher probability of success if it's in a strong sector where capital is flowing in. And on the flip side, those weak sectors, that's where you go to hunt for short opportunities. So now we have the data. The final, and maybe most important step, is synthesis. A professional doesn't just form one opinion and stick to it. They build a complete balanced outlook based on all the available evidence. This is what that looks like. For any potential trade, you use the data you've gathered to construct both the bull case and the bear case. So the bull case might be a high short float and strong technicals, but the bear case could be heavy insider selling and broad market weakness. Being able to hold both of those arguments in your head at the same time, that is the absolute key to effective risk management. You have to remember, the goal here is not prediction. It's reaction. We build a thesis based on the data we have right now, and we stand ready to adjust as new data comes in. Finviz isn't a crystal ball. It's a compass. It's a tool for navigating the market as it is, not as we wish it would be.
At the end of the day, your success is going to be determined by your process. So have a plan, follow the data, and always manage your risk. Stay disciplined, stay liquid. We are tracking these flows in real time. While you analyze the next move, check out the tools in the description. Sign up for Public to get $20 in free assets, check Webull for that BTC promo, or look into NVDA on Moomoo. All the links are down below. And hey, like and subscribe for more deep dive analysis. And just a final, important reminder, this analysis is for educational purposes only. It is based on current data, and that data changes rapidly. You should always conduct your own due diligence before making any investment decisions. So we've laid out the tools and we've walked through the process. The information is no longer hidden. It's right there on your screen. The only question left is, what's your next move?